What impact does inflation have on the housing market? I'm Eric with Andersen Homes, and the Federal Reserve has been fighting inflation by raising interest rates. In recent times, we've become spoiled by record low interest rates. Not long ago, I had buyers complaining about 4%. Today, getting 4% might feel like winning the lottery. But older homeowners remember getting excited about having a rate as low as 8%. Anything that wasn't in the double digits was considered outstanding. And while nobody is currently predicting double-digit mortgage rates, rates have been rising, causing the housing market to soften just a little as buyers wonder whether buying a home is still worth it. As rates increase, affordability decreases. So if you assume the same purchase price, your monthly mortgage payment will be higher today than it would have been at a lower rate. Many buyers are now priced out of homes they could previously afford. Higher rates reduce purchasing power. On the other hand, as the market continues to soften, buyers aren't paying quite as high of a premium for homes right now as they were a year or two ago. The insane bidding wars with 20 offers, waiving the inspection, and covering the appraisal gap are, for the most part, behind us. Home values have and will continue to rise, just at a more gradual, normal pace, and paying a 10% premium over asking price is, for the most part, not happening anymore. There still are bidding wars on nice, well-priced new listings, but the level of competition isn't quite as fierce, and the frequency of bidding wars is decreasing. Homes are still selling the first weekend on market, but it's not unusual for a home today to sit for a few weeks or even a month before a buyer comes along. Another thing to consider as inflation drives rates upward is that homeownership has traditionally been a great hedge against inflation. While real estate doesn't historically generate the returns of, say, the stock market, it tends to be a much more stable investment. Buying a home locks in what is often the largest portion of your budget, which is housing. As the cost of living continues to increase, rent is also increasing. And aside from paying a higher rent, renting generates a 0% return on investment. The other thing to consider is the economy is always changing. Home values typically increase even during recessions, and mortgages can be refinanced. This is where the phrase "date the rate, marry the home" comes from. And while there are risks with adjustable rate mortgages, I've had some clients take advantage of them recently to secure a better rate in the short term. Ultimately, the question of whether or not it's the right time to buy a home will depend on your circumstances more than anything else. If you'd like my help with buying or selling a home in the western suburbs of Chicago, reach out anytime. I'm Eric with Andersen Homes, a family-owned brokerage where we treat our clients like family.